Good morning, everyone. Welcome to the self-paced session on invoice processing. We will be talking about the invoice processing, the major T codes of the invoice processing, which one use. However, what we will do is we will talk about the entire procure to pay process, okay, and what happens after invoice processing so that it gives you a complete picture of the end-to-end process. So let's begin our session. So we will first talk about procure to pay. So as you know, when there are large organizations, GICs, they divide their processes horizontally, like procure to pay, record to report, order to cash, right? Order to cash means from the receiving of the sales order to receiving the payment, the entire process, right? Similarly, we have a process called as procure to pay, right from the identification of the need of a particular product in the organization till the time the payment is made to the vendor. The entire cycle is called as procure to pay cycle, right? So let us see, any organization which is there either procures the material or services, right? This is generally done through an agreement between two organizations. One is the vendor and one is, let's say, our organization, that is purchasing organization, right? So all the agreement has happened between the vendor and the party, and the vendor supplies the material at the required time, in the required quantity, required quality, and then the payment is made to the vendor and the entire cycles ends. So when we talk about the P2P module, it is also called as P2P in an ERP module. It is handled under materials management, module. Okay, and we will now move to the next slide. What are the steps involved in the P2P cycle? What are the critical steps in the entire P2P cycle? So the first step is purchase requisition. Purchase requisition is what? There are multiple departments in an organization, and any department comes up with a particular need that, for example, they need to procure laptop, right? So what they will do, they will raise a purchase requisition. This user department raises the purchase requisition. Then it comes to the procurement department, and what they do, they reach out to their vendors and ask them for a quotation, right? Then the quotation is received, price comparison happens, that who is providing us the best pricing, overall best pricing, and the quality comparison also. Once you are satisfied that, okay, the vendor Rainbow Electronics is the best one to purchase the to supply us the laptops, you will place the purchase order. The company will place the purchase order, right? Then what happens once the purchase order is gone to the vendor? All terms and conditions are mentioned into that. And then what he does, he supplies the goods to the organization. And as soon as the goods are supplied, then you receive the goods, and at that point you prepare a goods receipt note. Once the goods are received, the next step is that you will do the invoice verification. The invoice which the vendor submits, you will do the verification of that, and you will make the payment. So this is the entire procure to pay cycle, which starts from purchase requisition, and which ends at the payment, right? Now we will look at some more details into it. So so the step one, which is the purchase requisition, it all happens under the SAP. The T code is mentioned, but for the purpose of invoice processing, you just need to be aware of this T code. You don't need to know the workings of this T codes. Okay. So you see a purchase requisition, purchase request for quotation, price comparison, purchase order, all those have particular T codes. Now, After that, goods received happen, invoice verification happens, and payment happens. Okay. There is one important thing. Okay. Till the step 5, there is no accounting implication. That means till the time you raise the purchase order, there is no entry which comes and sits in the books of accounts, whether you do SAP, Oracle, any ERP, or any accounting software also. Even if they follow this process or follow this flow of events, no entry is passed in the system, no debit credit in the financial system happens. The first debit credit happens from goods received. So let's see on the other slide. So purchase order, goods received, invoice verification, and payment. These are the critical steps which we will be dealing in, day out, because our work will involve lot of interference or lot of touch point with the purchase order, right? So you see, now we will see which all things have accounting impact. Okay. So purchase order, while raising the purchase order, will there be any accounting impact? No, there will be no accounting impact when you raise the purchase order. When you receive the goods, right? That is the first place where there will be a accounting impact. There will be a particular T code which is used for receiving the goods, and we will talk about it. But when you do goods received, okay, what is the entry which get passed in the system? When you do goods received, the accounting entry which get passed in the system is inventory account debit to GRIR account. GRIR, goods received invoice receipt account. This is a parking account. This is not an account which is a comprehensive account. This is just a parking account. In the next step, when you receive the invoice, you do invoice verification. And once the invoice verification is done, then what entry is passed? GRIR account debit to vendor account, right? And the third entry, when the invoice is verified and cleared for payment, the payment is processed to the vendor. And at that time, the third entry comes into picture, which is vendor account debit to bank account. Very, very critical in the invoice processing overall things. 3 important entries which you will have to see, or which you will pass. You will not directly pass, but it happens automatically in the backend through the system, to the T codes where we will process good received. You automatically an entry is passed, which is inventory account debit to GRIR account. When you do invoice verification, automatically an entry is passed, which is GRIR account debit to vendor account. And third entry, as soon as the payment is processed to the vendor, the third entry is passed, which is vendor account debit to bank account, right? These are the 3 important, very critical entries. And 3 critical documents for invoice processing is the purchase order, goods receipt note, and the invoice. 3 critical documents which we will be dealing with in our entire session. And in the entire invoice processing work which we do, we will be dealing with these 3 documents, right? Is it clear? Sometime a question comes whether P2P is invoice processing. No, P2P is not invoice processing. Rather, invoice processing is a part which is like the, strictly speaking, the 7th number process is a part of the P2P cycle. The entire P2P cycle, which is from, if you see, if we go to the previous slide and see these 8 steps, right? This entire is P2P cycle, but invoice processing or invoice verification is a part of that cycle, right? It's a part of that cycle. So be very clear when it is asked about invoice processing and P2P cycle. Now you see, one more thing, let's assume that in your company, there was only one transaction. You have purchased one laptop for 1 lakh rupees from Rainbow Enterprises, for example. Okay. So when you will do good receipt, what is the entry which will come into picture? you will have inventory account debit, or let's say not take an example of inventory, rather take an example of some raw material ABC. Okay, when you purchase raw material ABC, then inventory account will get debited and GRIR account will get credited. So your inventory ledger will show a balance of 100 rupees, which is a debit balance, and GRIR account will show a credit balance of 1 lakh rupees, right? Now, coming to the next entry will be GRIR account. When you do the invoice verification and invoice is correct and right, then an entry is passed, which is GRIR account debit to vendor account. Okay, 1 lakh rupees. Now you see, inventory account is already debited, having a debit balance of 1 lakh rupees, right? In the second step, there is no inventory account which has come into picture, so the balance will be maintained. Rather, GRIR account is debited. So previously it has a credit balance of 1 lakh rupees. Now it has a debit balance of 1 lakh rupees. So ultimately the GRIR account balance is zero now after passing this invoice verification entry. Rather, vendor account will start showing a credit balance of 1 lakh rupees. So this entry is what? From GRIR account, which is a parking account, because I have just parked the payable because I have not verified the invoice. Now I have verified the invoice and I'm shifting that balance to my vendor account, right? From there, the payment can be made. So GRIR account, as I said, is just a parking account. So ideally its balance should be zero, right? Only because of certain outstanding invoices which are not processed or certain other outstanding reasons, GRIR account shows a balance. In normal situation, GRIR account will have a credit balance, a liability, and grouped under creditor's head when you make the financial statements under liability, right? Normally, it can have a debit balance also. Some situations which we will talk about in some other session. And the third is when you make the payment, now you see vendor account is showing a balance of 1 lakh rupees credit, right? When you make the payment, which is vendor account debit to bank, then what will happen? In the ledger account of vendor, there will be a debit and a credit of 1 lakh, which has come through step 7, and a debit of 1 lakh, which has come through step 8. So vendor account will also be zero and closed, and it will get a credit to your bank account because your bank account will also get reduced, right? So with this last entry, vendor account becoming zero, your GRIR account becoming zero, your entire P2P process ends, right? I hope I'm clear. Please, this is one of the most critical slide which we will have in our entire discussion. Now, sometime it is asked that what if you see accounts payable is a part of liabilities. When you prepare a balance sheet, accounts payable is a part of liabilities. Okay, either we use the word sundry creditors under liability and club all the vendor balances under accounts payable. Even GRIR account, after doing a scrutiny, the credit balance is also clubbed under sundry creditors account, right? So accounts payable always have a credit balance and grouped under liability section in the balance sheet, right? Now, as we see, we are just doing a part of the P2P cycle, especially invoice verification, right? So what we are focusing is on right from, we will see how a purchase order is made, how a GRIR is made, and how we do invoice document verification, right? So for purchase order preparation, there is a T code which is used, which is ME21N. Okay. So how do? You go to your SAP login, you log in and come to the SAP screen. Either you go to logistics, materials management, purchase order, create, and then you have ME21N, or you can just put it ME21N and do enter, you will find the screen where you will be allowed to raise a purchase order subject to the verification and internal process which is set in the SAP. But here our objective is not to teach you how to do or raise a purchase order, but let's see what are the important components of purchase order, right? So I call it as 7 W's of purchase order, right? The purchase order contains who will be the vendor, what will be the product which will be supplied, like SKU name, model number, or if we are taking a service, then description of the service. Then what is the cost? What is the price per unit, right? That is also mentioned. Even the total pricing is mentioned. That, for example, if you are taking 100 items of product ABC, per price is 15. So your purchase order will be of 1500, right? So what is the cost and amount? Where you want the delivery to be done? You have several warehouses throughout India. When you raise a purchase order, you need to tell the vendor where you want the delivery of that. When you want the delivery, sometimes what you do, you raise large blanket purchase orders, and for example, you want delivery every month for 100 units. Let's say you have raised a purchase order of 1200 units, but you want to take the delivery of 100 units per month. So you will mention that delivery schedule also in that, right? When the delivery should happen is also mentioned in the purchase order. What quantity is being purchased, right? That also will be mentioned. What is the billing address and when to pay, that is payment terms. This is also a very important component, right? Payment terms is also mentioned in the purchase order. So if you do this 7 W's, if you remember that, you will know what are the components of purchase order. But raising the purchase order does not come in the ambit of invoice processing as a process, right? Now, important thing, payment terms. When you do the purchase order, there is one important thing which is payment term, and which is also used in the invoice processing. Hence, I'm covering it here. That what are the terms of payments? That is when the payment will be made to the vendor, right, is included in that. So you have different payment terms, like net 7 means payment will be made after 7 days of invoice date, net 10, net 30, net 60, net 90, all that. That means after so many days, the payment will be made to the vendor, right? Cash before shipment means if the terms are that you have agreed for an advance payment, it is cash before shipment. Cash in advance is when you do advance payment to them. Shipment means just before the shipment, you pay the money to the vendor when the material is ready. And cash in advance means you will agree with some advance terms and make the payment. Okay. Like that, you have many payment terms which are used in the invoice processing. Okay. Which are used in the PO, and similar way when we make the payment, these becomes very, very critical. Some terms are like this also, TP06, right? Which is like 10% discount if the payment is made in 10 days. This is all cash discount. Incentive for early payment, 5% discount if the payment is made in 25 days, and payment within 45 days. So 45 days complete payment, else you will get a discount of 5% or 10%. So similarly, you will find payment terms on the purchase order, which is very, very important, right? So this is how it is. And if you want to see how the purchase order looks like, you can go to ME23N or follow the similar steps and go to ME23N display. And this is how the purchase order looks like. It will have which supplier, what is the date of purchase order, what are the types of delivery you want, how many units, what is the total pricing, right? Terms of delivery is to plant, etc. All that stuff, even payment terms will come into this. So all these stuffs will be mentioned on the purchase order. If you see, actual purchase order also looks similar when you raise from the SAP. So you can see the purchase order by using ME23N, give the purchase order number, and then you execute that command. You will be able to see the purchase order, right? Clear. I hope purchase order thing is clear. Now the next step which we have is the good receipt or invoice receipt, GRIR. Very important step which is there, and which happens normally when the goods are received at the warehouse. So again, as an invoice processing team, you will use PO, you will use GRIR, but you will not make PO or make GRIR, right? So this is a clearing account, as I told you, and this is generated or made at the warehouse normally, or whatever is the receipt location, it is made there by entering the basic details of the invoice or of the the receipt of the goods. So this is done through a T code, which is MIGO, MIGO transaction code. Through MIGO, we do good receipt. Okay. So here, when you do MIGO, this type of screen will open up. You will see what kind of document you are making, good receipt, purchase order. You will give the purchase order number here and then execute. You will find the next screen like this, where you will go to the vendor screen and you will see that what material has been ordered under this purchase order against this vendor, and you will fill up all the details, which is this screen under vendor. Then you will put up how many quantities you have received, where has these quantities being received, what is the purchase data. You will do that, and then delivery complete. When you do delivery complete and do execute and post, a material document number will get generated. That means a GRIR is posted in the system. That means what entry is automatically passed in the system? Inventory account debit to GRIR account is passed through this step. So GRN or GRIR interchangeably used. This step makes the first entry of the entire P2P process in the books, right? You can see this by going through MB03 is a T code. You can see whether the entry has been passed or not by putting the material document number and the year, and click on that. You will find this type of a screen where you will find there is an entry which is posted. There is a GRIR which is posted in the system. And when you click it further, you will see more details, what is the purchase order, what is the plant where it has been received, what is the material code, right? How many units we have received for this, what is the financial year company code. Everything will be visible under this. So GRIR, looking at the GRIR, sometime when you do the invoice processing, you may need some additional details or clarification, or just for the sake of understanding, you may want to execute this code of MB03, right? You may not need MIGO code. You may not need MIGO, but you may need the code to see, which is MB03 in the SAP, right? So with this, we have completed our first item, which is GRN or GRIR, right? This is also called as good receipt note, and the account which it goes is GRIR, and both are used interchangeably, right? When